All right, let's jump right in. In the next few minutes, we're going to challenge a core belief in investing. One of those rules you've probably heard a million times. We're going to take that rule and flip it completely on its head, all thanks to a really powerful framework from Mohnish Pabrai's book, The Dhandho Investor. Okay, let's get into it. You know the old saying, right? High risk equals high reward. It's like the first thing they teach you in Finance 101. But what if that's not the whole story? What if there was a way to find opportunities that gave you massive upside with very, very little downside? I mean, what if you could consistently make low-risk, high-return bets? This right here, this is the mantra. It's simple, it's powerful, and it basically defines the entire Dhandho investing philosophy. See, it's not about avoiding risk completely. No, no, no. It's about finding situations where the odds are so ridiculously stacked in your favor that if you fail, it's no big deal. But if you succeed, it's absolutely spectacular. This is the secret weapon we're about to unpack. Okay, so what is this whole Dhandho thing anyway? The name might sound a little exotic, but trust me, the idea behind it is something we can all understand. It's surprisingly simple and totally universal. So, Dhandho. It's a word from the Gujarati language in India. And while on the street it just means business, Pabrai defines it way more specifically. For him, Dhandho is about those rare, special endeavors that create wealth while taking on almost zero risk. It's a total 180 from that high-risk, high-reward model we're all so used to. And what's so wild is seeing who's been using this exact same playbook. We're talking about immigrant families who built a motel empire from scratch. Then you've got a larger-than-life billionaire like Richard Branson, who started an airline with just one leased plane while his competitors were going under, and an industrial giant like Lakshmi Mittal, who built his steel empire by snapping up failing mills for pennies on the dollar. I mean, come on, 3 completely different stories, all built on the same core principle. To really get this, we've got to look at a story. And honestly, there is no better example of Dhandho in action than the incredible story of the Patel families and how they took over the American motel industry. So, picture this. The year is 1973. A man known as Papa Patel has just been forced out of his home country, Uganda. He lands in America as a refugee with his family and next to nothing in his pocket. He has to figure out a way to survive, to support them, in a country that's completely new to him. I mean, his back is literally against the wall. Now, at the same time, the U.S. is in a nasty recession. The Arab oil embargo is making travel incredibly expensive. So motels, they're getting absolutely crushed. Banks are foreclosing left and right, and owners are desperate to sell. So while everyone else sees a total crisis, Papa Patel, he sees a Dhandho opportunity. So you're probably thinking, he must have needed a ton of cash to get in the game, right? Nope. The motel he found was on sale for $50,000, but with some clever financing, getting a loan from the bank, and even from the seller, all Papa Patel had to put down was $5,000. That's it, just $5,000 to buy a business that could start making money right away. And this is where the real genius kicks in. It is so simple, it's brilliant. First, the family moves into a couple of rooms at the motel. Boom, no more rent to pay. Second, the whole family works there. They run the front desk, they clean the rooms, they do the laundry, which basically gets rid of all their labor costs. So now they have the lowest operating costs in town, which means they can offer the lowest room rates. And what does that do? It drives up occupancy and leads to massive profits. They created a competitive advantage that was basically impossible for anyone else to beat. So let's actually break down the bet, okay? Pabrai figures there's an 80% chance of the best case scenario, making over $20,000 a year on that $5,000 investment. Then there's about a 10% chance a worse recession hits, which would mean zero profit for a few years, but he'd still own the motel. And then there's only a tiny 10% chance of complete failure, where he loses that initial $5,000. The upside is huge, and the downside is tiny and unlikely. It's heads I win, tails I don't lose much in real life. So what was the result of all this? A mind-blowing 400% annualized return on that initial $5,000 investment. That is the incredible power of a Dhandho bet. You find a place where you can invest a little bit of money for an absolutely astronomical return, all while keeping your actual risk super, super low.
That Patel Motel story is just incredible, right? But here's the thing. It's not a fluke. It's not just a lucky one-off story. It's actually based on a repeatable framework, a set of principles that really anyone can use.
So here's the whole framework, boiled down into 3 key steps. First, you find value. And that means don't chase the new, shiny thing. Focus on simple, boring, existing businesses, especially when they're in trouble and no one else wants them. Second, you minimize your risk. You have to insist on a margin of safety. That means buying something for way less than it's actually worth. And you have to find what's called a durable competitive moat. And finally, when you find one of these rare opportunities, you don't just dip your toe in, you bet big. And look, this isn't some weird out there idea. I mean, the legendary Warren Buffett basically lives by this rule. Papa Patel's moat was his family-run, ultra-low-cost structure. That advantage was durable. His competitors just couldn't copy it, and that's what guaranteed him those amazing returns year after year. Okay, so what does this all mean for you and me? How can we actually apply this? The Dhandho framework, it isn't just for buying motels or starting airlines. It's a really powerful mental model you can use to make better decisions in your own investments, your career, maybe even in life. So I'm going to leave you with a question, a challenge really. Just look around you at your investments, your job, any side projects you have going on. Where can you find a situation where there's a ton of uncertainty, but very little actual risk? Where are the opportunities that everybody else is ignoring because they're afraid of all the short-term noise? It always comes back to this one phrase. This is your filter. Before you make your next big decision, your next big bet, just ask yourself, is this a coin toss where if it lands on heads, I win big, and if it's tails, I really don't lose all that much? If you can start finding those bets, you've found the path of the Dhandho investor. The only question left is, where are you going to find yours?